Welcome, everyone. I'm Mike Marzen.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome back to another exciting episode of the What Matters podcast. I'm your host, Mike Marzen.
And I'm Ashley Ward.
Today, we're thrilled to have Leo Marzen, managing partner of Bridgewater Advisors, joining us. Bridgewater is a private fee-only wealth management firm based in New York City, managing more than $2 billion in assets. Leo has been working in the financial services industry for more than 40 years now and has co-founded Bridgewater Advisors Incorporated.
Leo's extensive experience and passion for helping others achieve their financial goals truly shines through his work. He's here today to share his wisdom with us and our listeners. Welcome to the show, Leo.
Thanks, Mike. Thanks, Ashley. Glad to be here.
Well, it's fantastic to have you join us today. We're excited to go through some exciting topics with you. So let's dive right in.
Sure.
Leo, let's start by exploring your journey. So can you tell us a little bit about your background and how you found your way to co-founding Bridgewater Advisors?
Well, in the early years, I thought I was going to be an accountant, a CPA. That's what I studied in college. And I think that was quite the popular major back in the 80s when I was there. Came out of college, accounting degree, went to work for what was then a Big 8 accounting firm, Coopers Lybrand, which is now part of PricewaterhouseCoopers, and enjoyed it very much. Great colleagues, but accounting world wasn't just what I was interested in. And around that time, I heard about this designation called the CFP, Certified Financial Planner. And the more I explored it, the more I could see my interests and passions seem to follow that. So slowly just studied on my own, got more and more interested. Back in those days, if you wanted to do what is now called wealth management, it was primarily through the brokerage industry. You were a registered rep, and you worked with other folks who were older than you, but it was all commission based, and that just didn't fit my temperament. Plotted around for a little bit, and then it wasn't really until the notion of being a fee-only investment advisor, a fiduciary, was really possible. And I credit firms like Schwab for being able to provide the technology for folks to go out on their own. And that's really when the business idea hit. This was in the early 90s, and have not looked back since.
Really cool.
Very interesting. So in the 90s, then you co-founded Bridgewater. Was it?
Correct. So
tell us a little bit about that experience.
Sure. So I went out on my own, late 20s, didn't have nearly as many gray hairs as I have now. And so a little harder to get started in the business. Look, this is a trust business. People trust you with their finances. So didn't have a ton of investment experience, but I had an interest in helping people. Really got involved in tax work on behalf of clients. And then I was only out about a year and a half or so, and my path crossed with another gentleman, a gentleman named Milt Stern, who truly started Bridgewater, but our paths crossed, and we were actually very different backgrounds, but very similar interests in terms of what it meant to service clients. So our paths crossed. We decided to keep each business separate, and we said the next client that comes in will be our joint client. And that's really how we got started. It was almost on a handshake, and slowly our business grew, and it was the two of us, and three of us, and four of us. And I can say the best thing that we ever did was find other people who have a passion for what we do. But Bridgewater grew from very modest aspirations. And I would say in the 90s, we were new, our model was fresh, the notion of independence was a bit more unique at that time, and it was actually fun going out, developing a client base.
So let me ask you this. Regarding Bridgewater, what year was it that you guys started the firm again?
So Bridgewater really started in 1993. That's when we say that the firm was founded. I went out on my own about 91, 92. I think Milt started about 91, 92 himself, but 93 is really when the two of us came together. And at that point, we really had a firm.
And tell us a little bit about Bridgewater. You guys have grown to around 2 billion plus in AUM. Is that correct?
That's correct. Yes.
And how did that growth take place? Was it through all organic growth, inorganic growth?
All organic growth. We have not purchased any other firm or bolted on any other outside operations. We are fiercely independent. We remain an independent firm. There are 8 owners. We all work in the firm as well. I realize it was probably a slower path to growth, but you have to do what feels comfortable to you. We have a very strong culture at our firm. We're very protective of it. We get good people. They like to stay for a long, long time. But yes, everything has been organic. And, organic just means either we go out and find clients ourselves or they are referred to us by existing happy clients.
And how many total teammates there now, including how many advisors and how many total people on the team?
A bit of a moving target. We just hired a colleague a few weeks ago. We have another one who's ready to start in July. Let's call it 23 at this point.
And how many of those 23 are advisors with you guys?
I guess client facing on the relationship side, let's call it approximately 14. And we do this as teams. So there's always 2 or 3 people on a client relationship.
And you guys are located there in just you just have the one hub there, or how many total different branches do you guys have?
No, our worldwide headquarters are in New York City. We're in Midtown, part of the Rockefeller Center area. All of our colleagues work nearby, and we really have not found a need to open up another office.
Good for you guys. Yeah, I talk to so many people where they're your guys' size and they have 8 or 9 offices, and I go, wow, that seems almost wasteful in a way, right? Because, yeah, how many people are really going to gravitate to a place to go work every day if there's only 2 or 3 people that are going to go in, some days none, right?
Well, I guess it depends on to what extent you might need a place to meet clients. Sometimes it might be because colleagues from the firm moved away and they want to establish their own presence. This is just something that worked for us, and so it does lead to a rather efficient operation. It also means that we keep the team together. So we're not back in the office 5 days a week. We're in on average 2 to 3 days a week, with one day, Wednesdays, where everybody is in the office. So, having the one office structure, I think, has led to a lot of efficiencies. Can't see us changing it at this point. We're not adverse if somebody does join us and has a separate office. That's fine. But we're going to work very hard to try to make sure that our culture stays as fresh and as relevant as it is now.
Really cool. Thank you.
And so I'm curious. So you said there's 8 owners of the firm now, and you guys all work within the firm. So there's you and Milton. Then how did the other 6? How is there's a plan for advisors to eventually get equity within the firm, or can you tell us a little bit more about that?
Sure. And just so to note, so my original partner Milt passed away actually suddenly, sort of tragically, in a car accident in 2015. So that was an event that we all went through,
Wow.
lived through, and firm survived, and we moved on. We are bigger now than we were then. We brought on some other new colleagues. So we have figured out how to keep this story going. So yes, myself and there are 7 other partners. We do have a path to partnership here at our firm. In fact, of those 8, 4 started in the mailroom, if you will. Some of them started right out of college and learned the business from the bottom up. These were people that we felt really, one, they took care of our clients well. They had a passion for what they do. They were smart. They are energetic. And these are people that we wanted to hold on to. And so it became obvious to us early on that we needed to structure the firm in a way that it was clear to our younger colleagues that there was a real future here. And so, we have a partnership path, if you will.
That's fantastic. And it must be great to see, their genesis in the career. And I think everyone wants to work somewhere where, that there's room for growth. So that's fantastic to hear.
We agree. We'd like to think that, if there's a meeting of the minds here, that there can really be a lifelong opportunity. It doesn't come without certainly hard work. We have to figure out how to work as a team, preserve the culture. But so far, I'd like to say we keep getting bigger and better.
And so, Leo, tell us along the way, what are some of the most valuable lessons that you've learned as an entrepreneur and a wealth manager? Any advice you have for aspiring wealth managers who potentially want to branch off and start their own firm, or any advice for navigating challenges within this industry?
I wish I could say there's a magic formula. There really isn't. At least there wasn't for me. I just think it's you got to love what you do. I remember someone said you become what you think about. So if you think about wealth management and how to help solve problems for your clients, guess what? That's what you're going to spend your time doing. So you got to enjoy what you do. You're going to do it for a long time. Be fair to the people that you work with, and be fair to your clients. In the end of the day, the only thing that we have to sell, we don't sell investment products. The only thing we have to sell is our advice. And our advice is only meaningful to the extent that someone has trust and confidence in what we say. And so that is critical. Sometimes you have to go to great lengths and put in a lot of extra work to maintain that trust. But in the end, it's very worth it.
And on a firm level, building a thriving firm requires a lot of hard work. Can you tell us how your team manages to differentiate yourselves in a competitive market, and what strategies have really been instrumental to contributing to Bridgewater's success?
One, it is work hard. I think we work hard, but I think we work efficiently. We are open to technology to help us leverage our team and our productivity. At the end of it all, though, we realize this is still very much a people business, and so we can use all the technology we want, but in the end, our clients want to hear from us. Mm-hmm. We have expanded our services over time. In the early days, it was essentially investment management. Well, it's gotten more competitive. We've always added on financial planning, or now called wealth management services. We've done that from the very beginning, and we've always had a foot in the tax world. So guess what? We do tax work for our clients, typically our advisory clients, if they so choose. And that has been a bit of a differentiator. I do know more firms are trying to add that on. It's a little bit harder. We've been doing it for 30 years. Some other firms run away from it, and they'll have the disclaimer, well, this is what we think, but check with your tax people. We actually run towards it. We like to see clients' tax returns and really dive into the weeds, if you will, to give them a full service approach to what we do.
And talk to us about, what do you see on the horizon over the next 3 to 5 years for Bridgewater? Where's you guys have built to, 2+ billion AUM so far. What do you see, over the next 3 to 5 years, or 5 to 10 years? I should ask.
Well, look, certain things are uncompromising, and that is, the independence, what we like to think is high level of service to clients. More of the same. We deal with also some very sophisticated clients, so it's a matter of expanding our services for them. It's understanding the marketplace, whether it be taxes or estate planning, and being able to make sure that we have either the resources in-house or go outside and find it. But it's a fast-moving world out there, and you have to stay competitive.
Yeah. Thank you.
Well said. And looking ahead, what do you envision as the future of the industry in a whole? Any trends, technologies, strategies you think are really going to shape the future of the RIA industry?
Well, look, AI is the buzzword these days, and everyone's trying to figure out what impact AI might have on not only wealth management, but all facets of life. We welcome it. We're not threatened by it. We look at this as a tool, or maybe an enhanced tool from the internet. The internet didn't put firms like ours out of business. In fact, it really made us even more valuable. But AI is a tool. You have to learn how to harness it. But as I mentioned before, at the end of the day, it still comes down to human decision making. I don't see that changing. But we have to be open to technology and using technology as ways to help us gather more information for our clients.
Absolutely. Now let's talk a little bit about investments. What investments and sectors are you most excited about right now? Could you shed light on any investments that you think could really potentially create the next wave of wealth creation?
Look, in the end, we continue to believe in equities as the real driver of wealth creation. Bonds and other non-equity type strategies are often there to preserve capital and maybe grow at the rate of inflation, but the real wealth, I think, will continue to come from equities. We deal mostly in the public markets, and we continue to see that as a cornerstone of our portfolio creation. But we're also open to other things like private equity and even private debt, real estate. So these are things that can enhance a core equity portfolio over time and give you competitive returns.
Speaking of real estate, give me your thoughts on real estate. I'd like to start off with commercial real estate. What do you feel? We've seen commercial real estate, go down in some areas significantly, and in other areas, moderately, but it's still, commercial real estate's taken a little bit of a beating these last few years. Mm-hmm. What's your opinion on commercial real estate? Do you feel like the other foot, or the other shoe has dropped yet, or do you feel like there's more room for it to go down, or is this kind of stagnated there?
Well, the really weak link there has been office, because I think the world's still trying to figure out what's the new normal in terms of office occupancy. I personally don't think we're going back to 5 days a week. I think that's gone. We've all figured out how to use technology to leverage our time and our presence. So I think office is still an unknown. It's not something that we would necessarily lean into at this point. What does appear to be attractive is infrastructure and multifamily housing. We continue to have a shortage of affordable housing in this country. There seems to be a very big backlog, and so multifamily housing seems to be quite appealing.
Do you think that residential housing the reason why values have stayed up with residential housing is because there's been a shortage of new homes from the builders?
I think that's very true. I mean, we had an excess, starting in '08 that led to a moratorium on building. I think also COVID has helped people figure out that they don't necessarily need to stay as close to work before. If they're going to work from home, they now need that extra room, that home office, if you will. If you have two income earners, maybe they need two offices so they can peacefully coexist at home. So I think it has led to a bit of a shift in residential demographics throughout the country.
Yeah. And, lastly, there's a question I'd love to ask, is where do you feel the economic outlook is? We've had so many things take place over these last few years, especially with interest rates. What do you feel is going to go on with the economy, despite who gets elected?
Yeah, that's always a hard one to answer, and we tend not to spend too much time in the forecasting business. But I would say, one, I'm glad that interest rates are a bit more normalized than where they were. They were artificially depressed for many years coming out of great financial recession, 2008. And I, believe very much in market forces. And so I think at least now we are getting more normalized market rates. Whether the Fed should cut or not, that's a different story, but I'd much rather be in a 5% environment than a 0% environment. At least the Fed has some tools to stimulate the economy that's natural by just reducing interest rates than artificial by buying up Treasury securities. I think the economy is in reasonably decent shape. I can't say that the market valuations are cheap, but I don't think they are wildly excessive at this interest rate level. Look, in the long run, there's really only two things that matter to stocks, the level of interest rates and corporate profits. And I think the level of interest rates is reasonable. People would say it's high, but they also these are folks who probably didn't live through the 70s.
Right.
We had, mid-teen type of interest rates, and corporate profits have been actually pretty decent, particularly in technology field. So I feel reasonably good about the valuation of the equity markets, which is really what I think is most concerning to our clients.
Thank you.
Thank you, Leo. Really appreciate you sharing your wealth of knowledge and insights with us today. Before we wrap up, any final piece of advice or words you'd like to leave our listeners with?
I guess I would like to say the wealth management field that we are in has been very gratifying because it gives us an opportunity to really get to know our clients and help them. I'm thrilled that it is becoming more mainstream than it was 30 plus years ago. And I would strongly support any college students. It's now graduation time. Those who are looking to get into this field, it's very rewarding, challenging, and stimulating all at the same time.
I love that. Well, thank you so much, Leo. And to our listeners, thanks for tuning in to another episode of the What Matters podcast. Be sure to tune in next time as we continue to explore topics that truly matter. Until then, take care and stay curious. Thanks, everyone.